Hey, everybody, welcome back to another beautiful day in real estate. Yes, it is Monday. Yes, it is a great day. So, we're going to dive into what's going on in the world right now. There's honestly not a whole lot that really came into effect this Monday. Over the weekend, we had a little bit of news, but I mean, right now it just seems like everything kind of walked into a very neutral Monday, right? So, market opened about 37 minutes ago. So, we're going to dive into what the current market looks like today on Monday, okay? Interest rates relatively have not moved. We're still at 5.89, 5.88 for the FHA VA. You guys who are under 6% interest rates right now, go out, start getting pre-approved. The spring market picked up again, especially since the end of Easter. Easter to now, I have been busy as hell. I've had showings. I've had buyers come out of the woodwork. People are writing offers. People are getting ready to move. The end of the school season is just around the corner. We're moving. We're doing good. And it's really optimistic for me again. I don't care what's going on in the war in Iran currently. In Bismarck, North Dakota, it's not affecting us, okay? I shouldn't say it's not affecting us. It's not a main concern of something that's affecting us, right? 6.29 for the conventional 30-year fixed. You guys, this is pretty good, decent. Like I said, I mean, we've kind of stayed right around those sixes since the beginning of the year. I still think we're just going to stay there for right now. Until this war ends, we're where we're at, okay? So if you're worried about what's going on in Iran for buying a house right now, you still have opportunity to be out there buying a house. And again, whether the war continues and oil prices go up, then inflation kicks in and your house is worth more. Or I shouldn't say it will be worth more, but there's a good probability if prices go up, so will the cost of your home, right? And if not, and interest rates go down, you're going to see the prices of homes go up either way. People think that real estate's going to be dictated by the oil market, and currently it's just dictating the interest rate, which is dictating the fact that people can buy houses or not, right? So I'll dive in just a second. I'll explain. Oil prices came down on Friday. As I said, the Strait of Hormuz opened up, and then on Saturday they're like, just kidding. And now Sunday we saw a little bit downward action on Monday. But I'm guessing we're probably only going to make our way back down to $82 a barrel ish. The next hold is 75. I don't think it's going to go below $80 a barrel. Currently, we're seeing some. Currently, we're starting to see. I mean, technically, we broke above that downward trend. If we retest, we can move up. And then stochastics all the way at the bottom of the barrel. So I mean, a bounce is pretty logical right now from a technical perspective. Moving into Monday, we didn't see any really good news. I mean, no, not essentially bad news, but I mean, the bad news is that the Strait of Hormuz isn't open, right? So right now, if I were a trader, I would be looking for a bounce right now. I'd be looking for it to move upwards. Well, we're at $85 a barrel right now, 86. My guess is 90 to 92 is probably that next bounce, unless we see some really good news that pushes the market back down again. I mean, looking at this, it kind of held pretty well under this support. So, I mean, it became resistance. So, we got to get through $88 a barrel, and then we got to get up to 92, and then we got to get up to 101. So, this opened today again, 40 minutes in. I'm not seeing a bunch of positive nor negative pressure. It's just kind of neutral. And I think the main reason is because what's tomorrow? April 21st. April 21st is supposedly the end of the 10-day ceasefire for the Iran and U.S. war. I have a feeling we're going to hear something between the end of today and tomorrow morning. I just don't. They're not just going to resume. There's going to be a reasoning behind it, right? So either they're going to come out and say we didn't come to a negotiation and they're going to start bombing each other, or they're going to say, actually, we got a deal. We figured it out. We're opening the Strait of Hormuz, yada, yada, yada. Right now, again, the 10-year Treasury bond is kind of flat. It hasn't moved much. 4.27 is becoming a resistance rather than a support, which has been beneficial for you because we've talked about it before. But the 10-year bond directly correlates to the 30-year mortgage, right? So right now, if we're sitting at 4.25 and interest rates are at 6.29, that means we're basically 2% separation, 2.04%, right? That just means that when bond yields go down, 10-year Treasury bond yields go down, then the mortgage rates follow, right? Why do bond yields go down? Bond yields go down because people are buying them. When people buy them, there's more demand, less supply, and it buys down the price, right? And then when it goes up, it's vice versa. So what we've seen in this war, especially, is when oil prices go up, so do the bond yields. Why? Well, because when bond yields go up, that's when there's less buying pressure, there's more uncertainty, and we're seeing oil follow, basically lead the run. That's why we start with oil in the morning, we go to the 10-year, and then we go to the 30-year mortgages, because they all kind of trickle together in a time right now where inflation and war and uncertainty and all that fun jazz. That's why we pay attention to those three indicators, right? And right now it's just telling me that we're heading south. Now, something that really does concern me is the S&P 500. The S&P 500 is sitting at relatively all-time highs, all-time high 712, and it opened with, again, not much movement. The market did a very big vertical from basically, what did we have, March 30th. So basically all of the month of April, we have seen one heck of a move in the S&P. We bottomed down here, we topped up here, a 13% move in 1 month. That's a pretty goddamn big move, and there's really no good news behind why that's happening. Just tons of money is getting pushed back into the S&P, which means most people are pricing in an end to the war. So unless there's something I'm not seeing, there's a lot of people thinking that this war is going to end very, very soon. And I'm honestly thinking that we could be leaning towards the blow off top of the S&P 500. We've been in a bull market for basically literally 1 year. We looked at this earlier today, and down here was the bottom. This was April 7th of 25. So literally we're a month in, and this has done tremendous movement. So from the bottom here, which was the tariff trade wars, all the way to the top, and we did a 47% return, dude. 47% 1 year in the S&P 500. This to me is very concerning, and a lot of people are going to say, well, why is that concerning? No, why is it? Well, it's the S&P, and for it to have almost a 50% gain in 1 year proves one thing to me. It means that it's overvaluated. This isn't supposed to move like this. Like, it has moved pretty significantly over the time. What was our most bottom before that? 22. So we've seen relatively a big move from 22. Let's see, 22 to here. 75%. So, I mean, put it into perspective. So we had, what was this? April. So it was 22. So 23, 24, 25. We had 3 years to get 75%. And then we did 47% in the last. I don't think this is going to end well. I think that we actually are going to see a peak in the S&P 500, and then we're going to go down from there. But it's not going to happen until the end of the midterm elections. To me, that's the only logical thing that makes sense. They are going to push and inflate the markets until they can't. And the way that they're going to do that, I'm going to stick to the old game plan, turning on the money printers, bringing interest rates down, and they're going to flood money into the market. If they end the war in Iran, they turn on the money printers, and they turn down the interest rates or bring down the interest rates, the market is going to flood. But with that being said, hyperinflation will ensue, right? If we have hyperinflation, let's see at the money to let's see some money supply. Where's the to money supply? Right here? No, that's MC's. Never mind. Anyways, my guess is we're going to see interest rates come down. I think bond prices are going to come down. We're going to trickle off that 3.7 range. 3.97. We're going to find some support here, 4.18, 4.19-ish, 4.2, and then we're going to head down to that 3.95 range. I don't think that we're going to get below that. To me, there's just 1, 2, 3, 4, 5 major points since October of 24 where it's bounced off of there. So it might go down, but my guess is 3.97 is going to be that point where we kind of stay. So again, I'm optimistic for real estate. I'm not optimistic for the S&P 500. I just don't see how that stays positive after the midterm elections unless they turn the money printer back on, which is a good plausibility because of the issues with the private credit market and the dried up liquidity. They have to stimulate the markets in one way, shape, or form. Again, it's not something that's ideal, but it's the one thing that's going to prevent the markets from imploding, right? So maybe they let the markets implode and they basically hit that reset button that everyone's talking about, but I just don't see it yet. I just don't see it quite yet. So the new data shows that 0 tankers made it through the Strait of Hormuz today, and this was on Sunday. It appears the Strait of Hormuz is now completely closed for the first time in history. The U.S. blockade and Iran's closure are in full force. To me, this makes sense. You guys, again, they moved into the weekend talking about how it was open, and then Saturday after the markets closed, no, nobody can come through. I think 23 tankers did not make it through. Basically, made a U-shape, V-turn, whatever you call, straight back to the ports. So something's going on behind the scenes that we haven't seen much about yet, and I'm not seeing news on both sides of the spectrum yet, which means, again, with tomorrow ending the ceasefire, my guess is we're going to see something happen tonight, good or bad. We're going to see something happen tonight. I don't know what it's going to be. I don't know what to expect, but I do expect something to happen. Now, Trump pushes back on the critics this last week too. This was this morning actually. Trump says that gas prices should fall after the Iran war ends, rejecting energy security. Chris White's warning that prices could remain above $3 until 27. There's not a whole lot going into this, you guys, but it's just, to me, this just means that again, there's something going on that we're not seeing. I will say the one thing I've noticed about Trump is he always is saying one thing while doing another thing. He's very very sleight of hand the way he operates. So I don't really know. Like I said, there's not much news coming out this morning. I expected more on this Monday after the blockade shutdown, but no, nothing. It's pretty flat. So last news story today, we're going to kind of keep it short and simple as best we can. But the U.S. government has began refunding $166 billion in tariffs charged under President Trump until the Supreme Court ruled the policy unlawful. Beginning today, businesses can claim files claimed through the new customs system. Over 330,000 importers across 53 million shipments are expected to be eligible. Once approved, refunds plus interest will be paid within 60 to 90 days. You want to know what really frustrates me about that whole entire thing? Tariffs were put into place. The Supreme Court came together and said, that's not legal, but we don't get refunded. So the people that actually bought the product and actually had to pay the increase in inflation or the inflated price don't get any money back. But the companies who pass the money off to us get refunded, and prices still haven't gone down. Now, I know they're implementing tariffs on a different side of things, but it still stands. They make this big deal about how tariffs are inflationary, and yeah, they went up, prices went up, but they kind of stayed there after prices went up, and they're not coming back down, but yet we don't get any of that money. You know, it's kind of looking down at the 30,000 foot overview, like these problems really have nothing to do with us. In my opinion, it's just one way to make more money for one person, and the best way they can do that is by turning it into a world show. So anyways, I don't have a lot of news today, you guys. I'm just kind of looking at everything as we move into Monday. Tomorrow, I'm expecting some more volatility. The ceasefire does end tomorrow. So again, let's figure out what happens tomorrow morning. We'll look into some news tonight, and we'll have some better stuff for you tomorrow. Have a great week.